Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Paul Dellaquila, President of Defiance ETFs, to discuss IBBJ performance, the junior biotechs, 5G and SPACs. Paul, it's great to see you again. Welcome back to Trade Talks.
Thank you very much. Pleasure to be here again, Jill.
Let's discuss IBBJ performance relative to its larger brother, the NBI, the Nasdaq Biotech Index.
Yeah, so since we've launched IBBJ on August 4th, we're very happy to say, and a lot of our investors are happy to see, the performance has been significant. We're up almost 50% in IBBJ, and that's compared to 15% in the broader Nasdaq Biotech Index. So it really speaks to the power and the potential of some of these junior biotech companies.
And a lot of that could be contributed to the R&D that they put into their companies or investing back into their companies.
That's absolutely right. So if you look at the spend on research and development, it's almost 63% of the revenue of the companies in IBBJ is going into research and development. So you're truly getting companies that are spending on cutting edge drugs, therapeutics, to help people live longer. That's relative to 28% in some of the bigger companies, because obviously once drugs are approved, they're gonna have to spend on marketing and other sources of that revenue. So it's a very direct play on the R&D spend within biotechnology with IBBJ.
And we also saw some M&A activity.
Absolutely, and that's the other part of this story that I think investors are excited about. So two of our bigger holdings, Immunomedics, was purchased by Gilead, Myocardia by Bristol Myers, respectively, both in September, October timeframe last year. So you obviously saw a very good price accretion to their stock price once those deals were announced. So we essentially want to look at the companies within IBBJ as the junior varsity, if you will, to those companies are going to be graduated to the Nasdaq Biotech Index, the bigger one, the parent index. So we're very excited about that. And if you look at the trend over the last few years, that M&A activity is pretty consistent. So we expect similar things in 2021.
Let's switch gears and talk about a couple of other hot sectors. 5G, FIVG, of course, looking at 5G and the potential that's starting to roll out even now around that technology.
Absolutely, and I think now investors are actually able to touch it, right? Like, you know, our neighborhood now, we have 5G networking. So if you actually don't have Wi-Fi, you can hop on 5G and experience it. It is a much faster network connection. Clearly, Apple rolling out the 5G iPhones in the fall, and you've seen the boom of sales that has happened with that. So investors have been excited about it. And now I think in 2020 beyond, they're actually going to start to feel the technology. They're going to start to play and experience with the technology. And I think that just is going to put that much more wind at the back for things like FIVG.
And let's wrap with SPAC, SPAK, of course, related to SPACs and the surge that they enjoyed in 2020 as companies look for alternative ways to access the capital markets. Do you think even when we get on the other side of COVID-19, that SPACs will continue to enjoy the popularity that we've seen?
I really do, and I think you touched on it. It's an alternative to the traditional IPO process. So clearly it's not going to replace it, but you look like a company like SoFi that's choosing to go public via the SPAC route. More and more credible companies are choosing to go that way. Also, you're having much more credible investors step into the SPAC arena and actually issue SPACs. So you're seeing Goldman Sachs, you're seeing TPG, you're seeing some of the biggest private equity firms, and they're bringing pretty significant war chests to the table. So there's a lot more capital available. So we expect, clearly 2020 was a record year for SPACs. We expect similar things in 2021. And the more high quality companies, the more high quality issuers of those SPACs that are coming into the marketplace, just going to add more credibility to the space in general.
Yeah, it's quite remarkable just how much capital is actually out there.
It is. And when you start thinking about that, I think that's a good thing, because ultimately companies becoming public, they now have to hold themselves out there for shareholders. There's quarterly earnings report. They're actually going to be held to task, if you will, for actually producing results. So there's more transparency into their books once they leave the private to the public markets. Plus, there are a lot of private companies right now that investors want access to, and that's good for them as a company because it gives more capital availability to them.
All right, Paul, great to catch up with you as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.